Through the turmoil and division of Clinton v. Trump, one thing has remained steady: an improving economy. And so Janet Yellen's telling Congress that she's readying the long-anticipated plan to gradually tighten the supply of money.
We indicated that the case had strengthened for an increase in the federal funds rate, and to my mind, the evidence we've seen since that time remains consistent with the judgment the committee reached in November.
Raising rates impacts emerging markets by making dollar borrowing more expensive, but a stronger dollar can also be beneficial for some exporting nations because their products can become more competitive. Janet Yellen admits that the election's thrown up new uncertainties about what impact they will have on America's economic engine. Donald Trump has risen on a wave of populism, fueled by his calls to drain the swamp and upend conventional political structures. The Fed chair's warning that central bankers around the world should be excluded from such impulses.
There is clear evidence of better outcomes in countries where central banks can take the long view, are not subject to short-term political pressures, and sometimes central banks need to do things that are not immediately popular for the health of the economy. And we've really seen terrible economic outcomes in countries where central banks have been subject to political pressure.
Donald Trump has promised to lower taxes, spend on infrastructure, revive traditional industries, and tear up trade deals. Such policies could lead to higher prices and prompt the Fed to raise rates at a faster pace in the future. But as Team Obama begins to hand over the reins of power to the still nascent Team Trump, Janet Yellen says it's simply too early to work out how this will all impact monetary policy heading into 2017. Daniel Ryntjes, CCTV, Washington.